Hello, everyone, and thank you for taking the time to review the real estate market analysis for Morgan Hill, California for March of 2012. My name is Robert Whitelaw, and I am a licensed real estate broker in the state of California, a member of the National Association of Realtors, and a certified ePro. And I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of southern Silicon Valley. Now, let me start off by giving you all the various ways to get in contact with me. The first is my website at www.soldbyrobert.com. That's the business side where you can get access to all the great tools I offer to my clients and to people interested in real estate data. You can subscribe to my newsletter, put out every month. Gives you the best, most up-to-date real estate information for the area around Morgan Hill and San Martin. You can also get information on your specific property. If you want to input your address, I have a free service that'll give you information on just what's going on in the marketplace right around your home. And if you're interested in other areas, you can also subscribe to information relating to different zip codes so that you can totally customize what you're getting as far as information relating to real estate. All these services are free. You can also sign up for free MLS access so that you tell me what kind of a property you're looking for, and the MLS will email you up to the minute information on properties that are available, unlike a lot of the other websites out there like Trulia and Zillow, which tend to be a few months behind. So if a property comes onto the market or sells, that information doesn't tend to go to those websites immediately. It tends to take some time for that to filter down. But with this particular service, it's immediate. It's the exact same tool that real estate agents have access to. The other side is therebelbroker.com, and that's really the home of my weekly live internet radio show, which we'll talk about here in a minute. But you also can look at the blog there. I have a fantastic feed of chosen information, articles relating to real estate that show up right there on the website, so you can always see what some of the latest news is that's going on relating to real estate. You can also email me at robert@soldbyrobert.com, or you can give me a call at 408-852-0525. If you'd prefer to use any of the instant messaging software like AOL Instant Messenger, Google Talk, or Yahoo IM, simply use the screen name The Rebel Broker. And my Skype username is Rebel Broker if you'd prefer to use that. Referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in my area, the southern Silicon Valley area, I'd be happy to help you in any way I can. If you are looking for an agent somewhere else in the United States, feel free to let me sort of go out there and make that search for you. I know the right questions to ask. I'll ask you what you're looking for, and then I'll find the perfect agent for you. Now, finally, my Twitter feed is a great way to stay up to date on some of the latest information. So if you want to check in at my Twitter feed, you can get access to that through either one of my websites listed here. Now, I do have my weekly online call-in show, Real Estate Realities, now started in 2007, so we're on our 5th year. Looking for more folks to come and participate. It occurs on Fridays at 10 a.m. Pacific time. You can dial in using an 800 number, ask any questions you like relating to real estate, participate every week between the hours of 10 and noon. Feel free to tune in. But if you miss the show, or you just don't have time on a Friday morning to listen to the show, you can enjoy any of the archived shows going back for at least a year. If you'd like to listen to any of those, you can access those at blogtalkradio.com/Rebel Broker. You can also find them at either one of my websites. You can also find them on iTunes, where you can subscribe to them using the iTunes application so that you can enjoy it on your phone or on your iPod. Now let's go ahead and jump in and take a look at some of the supply numbers here for Morgan Hill for the month of March. Now we're going to look just at the month of March going back a few years here, back to 2007. So this way it eliminates any of the confusion that tends to come from month-to-month changes. So there's no seasonal stuff to worry about here. This is just the month of March. It's so that we're focused just on what happens in March. Now, you can see the trend here generally with inventory as we saw a bottoming out in 2010. We've seen some pretty dramatic increases over the last couple of years. Not something to be totally concerned about once you take into consideration the other things we have going on in the marketplace. So let's go ahead and bring all the data up here so you can see what the differences are. Now, you can see if we compare the inventory numbers to, say, 2007 and 2008, which is the last time we saw inventory numbers this high, it was also accompanied by many more homes being put on the market during that month, and also much lower sales. So while 2007 and 2008 were huge concerns because of the low sales, 2012 with the same inventory numbers, a little less concerning because we've got much higher sales numbers and not nearly as high new listings added to the marketplace. Now, if we sort of just analyze this on a year-to-year change from 2011 to 2012, inventory has gone up 29%. That's a 67 house increase. So 67 more houses are on the in the inventory right now in Morgan Hill than at the same time last year, for a grand total of 298 homes currently on the market. As far as new listings are concerned, from 2011 and 2012, we've seen a 9.21% increase in the number of homes that are added to the marketplace in March. That's 7 total homes for a grand total of 83 homes added to the market in March. Finally, sales are up 24.39% from the same time last year. That's 10 more homes sold for a grand total of 51 homes sold in March of 2012. Now, one way of looking at this, and I think it's probably the more important number to look at, is the ratio of sold homes to homes in inventory. And we really get two numbers from that, or two conclusions we can come to from that. Now, if you look back at 2008, that ratio was very high. It was something in the neighborhood of 10 homes sold, or 10 homes in inventory for every one that's sold. And you can think of that in two ways. Right now, it's more at 5.8. So if we froze the inventory at what it is right now, and the sales numbers remained the same for every month coming up, it would take us 5.8 months to sell off the inventory. Another way of thinking of that number, and a way I like to explain to my clients, is think of it as a competition number. For every home that sells, there are 5.8 homes trying to get sold on the marketplace. So that's kind of an indicator of who's got the power. Now, I normally like to see this ratio below 5, more like 4, 3.8 to 4.2, right in that neighborhood. Seems healthy to me. When we've had healthy markets, that seems about where it is, where it should be. So it's a little bit higher than I'd like to see it, which definitely indicates it's a seller's market, or buyer's market out there. But it's not as bad as it was at the worst. I know a lot of people have tried to paint the marketplace as back where it was because of the inventory numbers. But when you take into account homes being added to the marketplace plus the number of homes that are selling, that just doesn't really bear out what's really going on. It's not an indicator of the real market we're seeing out there, where homes are tending to sell a little bit more quickly. And we're going to take a look at the days on market numbers coming up as well. But these inventory numbers are a little concerning, but the sales numbers sort of bring them back down to earth a little bit because we are seeing more activity. It'll be interesting to see how the coming months turn out. We've seen the marketplace get hotter earlier during the last few years, and then petering out quicker, so we don't get as long of a season as we have, or at least a season that extends into the summer months as much in some years. Well, it'll be interesting to see how that plays out this year. Now let's go ahead and take a look at these same numbers, but now we're looking at just chronologically going all the way back to January of 2011 to sort of get an idea of what the trend is. You can see the inventory has clearly been trending up. Back in the third quarter of last year, we saw an increase in the number of notices of default, which is an indicator of future short sales and foreclosures. The third quarter of last year, and we were projecting, if you're a listener to the weekly show, one of the things we were talking about way back towards October, November of last year, and leading up to these first few months of this year, we were talking about how in March to expect an increase, a pretty big increase in the number of homes that went on the market that were short sales and foreclosures because of that increase in notices of default last year. And we've really have seen that. You can see that from month to month basis, we've definitely seen a quicker ramping up of inventory as more homes were listed. We've seen it in February and March. If you sort of look at the trend, you can see that the overall trend on new listings per month is down, but sales are up and inventory is up. Again, not at a concerning level. We're still below the ratio of 6 between inventory and sold homes. So that's not so horrible. As far as the change from February of 2012 to March of 2012, inventory is up 22.63%. That's 55 homes That's 55 more homes in inventory in March than in February. So that's a pretty dramatic jump for this marketplace. And again, that gave us a grand total of 298 homes on the market. We had a 12.63% decrease in the number of homes listed. That was 12 fewer homes listed in March than in February. For the total number of sales, we had an increase of 37.84%. That's 14 more homes sold in March than in February for a total of 51. And again, the ratio was 5.8. So not horrible, but not fantastic either, sort of riding the edge there a little bit. Now, let's take a look at the short sales and foreclosures. I think this is an interesting number to look at. Now, 47% were conventional in March, 33% were short sales, and 20% were foreclosures. What's interesting to note is that last month, what we saw was conventional 57%. There was a big switch between conventional and short sale or distressed purchases. I think what's interesting to note there is that there's a couple of things going on. One, we've seen more short sales and foreclosures coming onto the marketplace simply because of what we saw last year in the third quarter, which included homes that were getting notices of default. So more of them came out on the marketplace. Now, what's interesting and what hasn't happened in previous years is these properties are selling quickly. Short sales are tending to go relatively quickly. A lot of banks have taken an entirely new approach to how they're doing short sales and foreclosures. Now, we've talked about this a great deal on the live show on Fridays at 10 a.m. Pacific time. If you'd like to participate, I gave information about that at the beginning of the show. But it's been a very dramatic change. They're pushing short sales much more. So we're seeing short sales taking up a bigger percentage of the distressed properties in general. But we're also seeing marketing and pricing strategies that are getting these homes sold relatively quickly. So I'm seeing a lot of short sales that are selling with huge numbers of multiple offers. I went to a short sale last week where they had their first open house, and there was literally over 100 people there to view the short sale. And banks are being very aggressive on this. They're intentionally pricing these things way below market in order to get as many people into them as possible. And when I walked out of that particular short sale, the realtors there holding the house open were saying, we're gonna cut off offers tomorrow, so you need to do a 1-page offer today. And if you make that cut, we'll ask you to write up a full 8-page formal offer. There's no question in my mind that house is going to end up selling for market value because you had 15 people signing offers just in that hour-long period of time I was there showing the property to a client of mine. So very different dynamics between this year and last year on short sales, distressed properties in general, all throughout the county, in fact. I've seen it happening in San Jose and Morgan Hill. I've seen it happening in Campbell. All over, these things are changing. So it's an interesting change, but it also could be a good market change because this preserves property values. By being more aggressive on the short sales, you're getting these homes to sell for more than they would, and they're selling for faster than they were before. And over the last 3 weeks, I've seen a dramatic increase in the number of buyers. I've had one buyer who has contacted me on 3 homes, and then at time it takes them to decide they want to look at the property, from first time seeing it to deciding or seeing it in the MLS to deciding they want to see it, it has gone pending. So they see it, they tell me they want to go take a look. We make an arrangement that works for them to go see it. And before we can even get to the house, and usually there's less than 24 hours between them deciding and then us getting ready to go, the home has gone pending. So much more activity. It's interesting to sort of see how these things are playing out. Now let's take a look at home prices because this is pretty interesting. And we're looking both at average price and median price. And let me explain what the difference is. The average price is just the average price. It's the average of all the prices. You take all the prices that homes sold for, divide it by the number of homes, and then that gives you the average price. The median price is the point at which half the homes that sold are above that amount and half the homes that sold are below that amount. So when you see that brown bar, that's telling you where the emphasis was. So for instance, in 2010, homes tended to be clustered below average price, meaning there were a few houses probably that sold for way above what the average price, what the median price was, which gave us a higher average price. Just you see how that works? So it's interesting to see what the market influences and how things are going. In 2011 and 2012, these numbers have been relatively close with one another. In other words, not a lot of variation. We're not seeing a huge amount of clustering. When the market was at its worst in 2008 and 2009, you can see, at least for the month of March, because it was also pretty bad in 2007, that most of the activity was happening at the lower end of the price spectrum. What's interesting is that my hands-on experience here in Morgan Hill has been that we're continuing to see a great deal of interest at the lower end, but a lot more disappointment as folks realize that a lot of these properties at the lower end simply aren't going to fill their needs. So I'm still seeing a high level of interest. This particular graph doesn't demonstrate what I'm seeing in terms of my customers and what they're searching for, but at least it informs us on sort of where the cluster is and where the average price is. Now, the average price is actually $423,875 right now in Morgan Hill. The average home price from 2011 to 2012 for the month of March declined by 8.93%. That's a $41,580 decline. This also shouldn't be seen as, if you're a person who owns a home here or someone who's been tracking a home in Morgan Hill, a house that would have sold for $400,000 last year now will sell for 8.93% less than that this year. A lot of this simply has to do with where activity is in terms of where people are doing the buying. That $1 million house that was sold for $1 million last year is probably still worth in that neighborhood this year, maybe down a couple of percentage points, but it really is more dictated by the number of buyers present at the different buying levels. For instance, I've been tracking several properties that are over $1 million, and these homes are selling. There's just obviously fewer folks at that price point. I haven't seen any of these properties that really have seen a dramatic drop in what they actually could get from last year. It's really been just a question of how many sellers are there? And that's the classic supply and demand question. We have a supply of homes at a certain price point. How many folks are demanding homes at that price point? And for sellers, if they have to sell now, they simply have to drop the price. So that would obviously affect it. But if they're patient, usually a buyer is coming up. I'm not finding people having to take huge drops in their asking price as we've seen in previous years. There's still folks poking around out there. It's not like it was in 2008 and 2009, where homes languish forever at some of the higher price points. Let's see what else. What other kind of information? The median price was $415,000. The median dropped 10.75% from the same time last year. That's a $50,000 drop. The highest price single-family residential home that sold in March was at 1190 Yeagus Road in Morgan Hill. It was a conventional sale, no special financing of any kind. It sold for $1,125,000. That was, I believe, only about $50,000 below asking price. The lowest priced home that sold in Morgan Hill for that month was 201 Del Monte Avenue. That sold for $213,500. It originally was listed for $220,000. So we're not seeing huge drop-offs. Additionally, the average price per square foot in the month of March of 2012 was $230 per square foot. Okay, now home prices over past months. Now we're just looking back chronologically straight over at what's been happening. You can see we've had some months where clearly we had a few homes that were that were higher priced sell. So for instance, February of 2012, the cluster tended to be at about $475, but we had an average price that was way above, like right around $550,000, $600,000, and that was probably because of a couple of homes at the higher end that sold. You can see that in the month of March, things are a little bit more in equilibrium in terms of median price versus average price. The percentage price change from month to month, though, from February to March, is a 28.97% decrease. That's a change of $172,869. And just like with our other statistics, you take that alone, a month-to-month change isn't something you should really get too concerned about in a marketplace. That doesn't represent a real change where everyone in the marketplace suddenly seems to think that they need to drop their price 28%. That's a unique thing that happens given the time of year and given the types of homes that sold during that month. Median price change was down 8.74%. That's a $39,750 change. What do these numbers really tell us? Well, if you look at it and you sort of realize that the center of this graph is really the summer months, volume has a great deal to do with this. When you have years with higher volume sales, you can, particularly when you're coming off of a market where things have sat on the market for a very long time, you can see days of market can get thrown off, but you can also see that you're simply getting rid of some older stock, maybe something that was higher priced. In this particular case, we obviously had some months where things that were much higher priced sort of threw off the average simply because we had too few homes selling in any one of those given months. But as a general trend, this actually looks pretty flat to me. When you take into account the seasonal differences, I'm not seeing a huge change here. And that line, that blue line going across, I think it's virtually straight. So I think that sort of backs that up. I think it's been, relatively speaking, a very flat year for us. Now, the days to sell. This is comparing past years. In 2007, we had 79 days on the market, then a really big jump for 2008 and 2009. And then in 2010, markets really recovered quite a bit. Last year for March, not so good, to 131 days. And now we're back down to 93 days. The days to sell change from 2011 to 2012 was a decrease of about 29%, 38 fewer days to sell. And this really speaks back to the point I was trying to make earlier about the ratio between inventory and number of homes sold. Despite the fact we have this higher inventory, we're not seeing a time period, the amount of time it's taking to get these homes sold. For instance, back in 2008, we had almost the same number of homes on the marketplace, but it was taking 137 days to get them sold in the month of March. We're not seeing that primarily because we're seeing a lot more buyers out there. Things are tending to go quite a bit quicker, which all plays into a little bit more of a healthy market in terms of just the number of sales versus the number of homes trying to get sold. Now we'll look at days of sold just over past months. You can see things again. This is the trend here is a little bit down. We're actually seeing the trend heading in a downward direction. You can see that we had some pretty big numbers in the first 3 months of 2011, then relatively low numbers. We saw a little bit of a boost. And again, this also can demonstrate an instance where if you saw an increase in the number of homes sold, by definition, you're now selling into, particularly if you sell more homes than were listed in a given month, you're now dipping more into some of the older stock, and you'll see a jump in the days on market. But if you're averaging these numbers out, if you're looking typically at what we're seeing as we move through the year, gradual decreases. It's not going to surprise me at all if for April and May we see continuing decreases, if we see some pretty healthy numbers below 90 days for these homes to get sold. And you can see that basically we've gotten between February and March a doubling in the number of days on market. So we sold off a lot of stock in February that had only listed in December and January. So a lot of homes that listed in December and January got themselves sold in February, which is actually pretty good. You can see that in March, it was the same chunk of homes, December, January, February homes that listed that got sold in March, with the average days being 93 days on the marketplace. So we're maybe looking back also into October and November for the bulk of homes that actually sold on the market that went into March. So we're selling, the homes that we're selling are tending to only see a maximum of on average about 90 days on the marketplace. That's going to shift depending on where you are in price. If you're a seller out there worrying about thinking, oh, great, I can sell my home in about 90 days. With proper marketing, you need to be very aggressive. Sellers need to be very aggressive out there, but you need to understand that, again, this is an average. So the average priced home is going to sell for an average in about 90 days. You need to be very aware of what your agent is or isn't doing. You should be shooting for below 90 days for getting your home sold. If it doesn't sell in that amount of time, you should really be trying to figure out what's going on in terms of your marketing. Now let's just take a quick look at where a lot of the homes sold. Not a lot of insider info on the spread here. We're not seeing a particular concentration. We always get a little bit of a concentration on the Dunn Street corridor that sort of goes up into the mountains towards Holiday Lake Estates and Jackson Oaks. One reason for that is that area is very popular because you have Oakwood Elementary School, or excuse me, not Oakwood, Nordstrom Elementary School and Jackson Oaks Elementary School, two of the more popular schools in Morgan Hill, because they tend to perform a little bit better. But the rest of these are really spread out all through the western end of town, with a slight concentration of some of the newer properties that are over off of Watsonville Road, off of Monterey, in the southern end of town. All right, again, here's all the information you need to get in contact with me. I won't rattle it all off. We did that at the beginning of this show, but I do appreciate you taking the time to listen to these market analysis shows. If you have any questions, please feel free to get in contact with me, and I look forward to talking to you all next time.